We would like to warmly welcome you to today's learning series. This is the first session for 2026, and the topic for this morning is understanding dormant accounts. We are fully aware that in some instances, dormant accounts are often misunderstood by many within the public. Many individuals are unaware of what qualifies as a dormant account, what happens when an account becomes inactive, and what steps are required if they wish to reclaim those funds. So during this public education initiative, the aim of the discussions today is to demystify the process and to provide clarity to you, the general public, while we highlight the institution's responsibility as well as the central bank's role and the process involved in the entire reclaiming of your funds. The topic this morning is particularly important in an environment where financial inclusion, consumer protection, and transparency remain, among others, key priorities for us here at the central bank. So we continue to emphasize that sound account management practices and customer awareness is very important. So we believe that with you understanding dormant accounts, it can help for you to safeguard your funds and ensure that institutions comply with regulatory obligations. And with that being said, this morning, who's going to present to us, they'll share and lead in the discussions. I'm pleased to present to you Mr. Derek Burrows. He's the manager of the finance department. He has his experience spans over 25 years in the financial services sector, including offshore banking, public accounting, and he has been here at the central bank for the past 7 years. He is joined with our colleague, Mr. Gavin Brown, who's a finance officer in the finance department. And Mr. Brown has 19 years experience in the financial services sector, including 10 years here at the central bank. And Mr. Brown is responsible for dormant account funds administration and investments. So today, both Mr. Burrows and Mr. Brown will guide us through the regulatory framework, giving us some highlights from the regulatory framework, operational processes, and practical implications surrounding dormant accounts. And to aid with the flow of the presentation, we ask that you take notes as needed and retain all of your questions to the end during the question and answer period. So without further delay, I would like to invite Mr. Burrows to commence the session. Welcome, Mr. Burrows.
Good morning. Thank you for that introduction, and thank you for those online. I just want to confirm, can you hear me properly?
Yes, we can. And
All right,
I can see your screen too.
Awesome, thank you. Okay, so myself and Gavin Brown, we're going to present, and we're going to not be as technical, and hopefully in that format it is easily digestible. From our presentation outline, the first section, we would get in the understanding of how we got here, a bit of a background, progressive strengthening of the governance structure, benefits of the governing laws, and objectives of the guidelines. We then move into the area of understanding the current dormant account framework, define what is a dormant account, what types of accounts can become dormant, and get into the 7-year period explained. We then move into the, I guess, the hot topic in terms of reclaiming funds, and describe the institution's responsibility, the role of finance, and get into some key takeaways and facts. So, in understanding the background, we'll get into the dormant account laws, which were introduced in 1989 to ensure that money held in dormant accounts were to be transferred to the custody of the central bank for safekeeping when there were no customer-initiated activities on the account for a period of 7 years, which which makes up the definition of what a dormant account is, which Gavin will touch base on later on. Prior to 1989, funds with no customer initiated activity were eventually absorbed by those institutions. So this is an important step here, in which the dormant fund initially began to govern. During this period, dormant accounts were held at the central bank indefinitely. So the dormant account laws were not as robust as they are known today, and did not set clear parameters around administration of the dormant accounts. And from 1989 to 2018, dormant funds remained in the custody of the central bank. And no, I am not on the beach. The noise from the street comes through my room fairly easily. Where these funds, so remained within the custody of the central bank, where these funds were invested and interest accumulated. Submissions were received and claims were processed. No escheatment or transfer to government existed at that time. Since the enactment of the Central Bank of the Bahamas Amendment Act 2018 and the Banks and Trust Companies Regulation Act 2018, dormant funds are now held at the central bank for 10 years, a total of 17 years of no activity, before being remitted to the government by the Public Treasury Department. Not only did this amendment allow for the transfer of dormant funds to the government, it also instituted a threshold in which claims would be actioned. So an additional 10-year period was added to the 17-year dormant period, totaling some 17 years, after which no liability remains with the central bank. The enactment also included or assured that institutions would keep documentation an additional 10 years subsequent to the transfer of funds, and this would provide for additional record keeping and information tracking. As of 2025, the total remitted to the Public Treasury Department was some 63,589,544.37. And this includes from inception. The first remittance to the government took place in February 2019 and now continues on an annual basis. Progressive strengthening. Some of this I may have covered already. For prior to 2018, accounts are held indefinitely at the central bank. 2018 brought in accounts held over 10 years had to be remitted to the public treasury, to the government via the public treasury. Accounts less than $500 had to be remitted immediately to the public treasury department. And interest shall accrue and are to be paid on accounts transferred where applicable. 2020, types of accounts were further expanded. Most of the expansion took place in 2018, really the robust structure came into place in 2018. 2020 included gemstones. The 7-year period is more defined, stating we're going to start calculating the period depending on the type of account. The central bank is to be paid the equivalent amount together with interest if interest was payable by the bank who submitted the funds at a rate that the central bank determines. The most recent updates took place in 2025, where the Minister of Finance may request a withdrawal of interest income accrued on dormant account funds to be used by the government. In the assistance of some small home repair and hurricane repair programs. So we see where the dormant account administration has progressed and moved funds into usefulness for the country on an overall basis. Progressive strengthening of the governance structure. So the Central Bank of the Bahamas Act 2020 outlines the governance framework for the administration of dormant account funds. As such, the account provides for the establishment of a fund for the inactive deposits placed under the central bank's custody and empowers the central bank to invest and reinvest dormant funds. So to facilitate this investment function, the Act further provided that a committee be established and referred to this committee as the Dormant Funds Investment Committee. This committee officially began in 2023 when it held its first meetings, which eventually transitioned into a quarterly meeting. The committee is tasked with giving oversight and approval of the dormant investment guidelines, reviewing fund activities and the overall performance of the fund and those investments. The committee is made up of internal and external members, consisting of one chairman, two members, one of the members external professional, secretariat, and a recording secretary. The chairman is is an executive of the executive managers at the central bank, giving strong governance over that committee and how the investment process transitions. So we move here. What are the benefits of these governing laws? And moving forward with our oversight, the dormant account laws protects individuals from losing money held with a bank on forgotten accounts for a specific period of time. And that's kind of what defines it, dormant, right? Many people, for some reason or another, forget about or lose track of their deposit accounts held by the banks. So the dormant account laws were enacted to protect persons prior to the enactment of these laws. These funds were absorbed by institutions as indicated. And you can just imagine the lack of KYC and documentation at that time. So in fairness, in some instances, it may have been even a challenge to locate beneficiaries and the like. The law provides for money held in dormant accounts to be transferred to the custody of the central bank for safekeeping when there is no customer-initiated activity on the account for a period of 7 years. So as some of you might be able to appreciate, dormant accounts, similar to suspense accounts on an organization, some of the more risky accounts in any organization and susceptible to some fraud because of the lack of owner oversight. Owners are not actively watching. So the act here enhances the security by ensuring there is ensuring that there's direct secondary oversight of these unclaimed funds, and enhances the transparency in relation to the administration of this process. Money transferred to the central bank can be claimed within a specified time frame within 10 years from the point of becoming dormant. Prior to the enactment of 2018, money transferred to the central bank would remain in somewhat of a dormant state without any beneficial usage. So these are some of the benefits highlighted by the guidelines. Some key objectives. Again, the primary purpose of the dormant account guidelines is to protect account holders from losing their money and to ensure that forgotten and abandoned funds are managed transparently. Some regurgitation here, but it needs to be. It enforces the intent behind the dormant guidelines. Here are some standardized frameworks for banks to identify. Well, the guidelines provide standardized framework for banks to identify, monitor, and eventually transfer unclaimed assets for safekeeping, inclusive of the following here. Customer protection. Ensure banks track customer funds, allowing owners or heirs to claim their money years later. So customer protection, this tracking is inclusive of the 7 years of inactivity, plus the additional 10 years at the central bank. And even further, the banks are to maintain an additional 10 years of customer information. So ultimately, the individual's relationship is with the bank. And you'll note further that any claims or any official interaction really comes from that institution who acts as an agent on the customer's behalf to write into the central bank. Any transaction takes place directly with the bank itself. So the bank is going to be the first point for that customer to advise that customer, even if the funds were already mistreated to the government, advise that customer of what would have taken place with their funds once that communication happens. Administrative consistency. So the guidelines set a minimum standard for how banks must investigate inactive accounts before declaring them dormant. Fraud prevention. Regular monitoring of inactive accounts, reducing the risk of unauthorized transactions on accounts that owners are not actively checking. So we see the banks initiate the inactive accounts coupled with scheduled notices at year 1 mark. Customers are notified that their accounts are inactive and encouraged to come in and reactivate. And just before the 7-year dormancy, there may be a period in there as well, but just after the 7-year, customers are also notified. The guidelines also standardize disposition, outlines the legal time frame for transferring funds to the central bank after 7 years of inactivity, and enhanced transparency. Banks are required to maintain a register of dormant accounts, which is subject to inspection by the central bank to ensure accountability. And this takes place during inspections, online inspections, not online, on site rather. So what are dormant accounts? Pursuant to Section 78(2) of the Banks and Trust Companies Regulation Act 2020, a dormant account is a deposit account or other facility at a bank where the customer has initiated no transaction for a period of 7 years. This can be a deposit account or other facility held with the bank. Further, other facility includes an account or arrangement that is provided by the bank to a customer, such as bank drafts, manager's checks, money orders, and traveler's checks. Dormant accounts versus inactive accounts. We want to stress here, inactive accounts are not dormant accounts. As we know, the time frame to be classified as a dormant account is 7 years of inactivity. Banks classify deposit accounts or facilities as inactive if the account owner does not conduct any transaction on the account or facility for a period of at least 1 year, almost up to 7 years. It should be noted that these accounts are not dormant and they remain in the custody of the bank and typically require KYC documentation to be reactivated. And this is important as both terms are used sometimes interchangeably and present some confusion to the customer and some undue, interactions evolve where they anticipate that their inactive account is dormant and they have to reach out to the central bank. So at this point, I'm passing on to Gavin to get into the types of accounts and a little more of the act itself. Gavin.
Good morning, all. So I'm going to get into more of what the Act speaks to give a proper definition of what all type of accounts can become dormant. So from the Act, types of account that become dormant are a deposit account, including demand, savings, and fixed term deposit accounts, a checking account, a bank draft, cashier check, certified check or money order, a traveler's check, a credit balance on a credit card, a credit balance on a loan, collateral held on a loan, including cash and non-cash collateral, funds paid for shares or other interest in licensees, a custody account or safety deposit box, a deposit account of precious metals and precious gemstones, all securities listed on Part 1 of the Security Industry Act, Schedule 1. And that speaks to what all constitutes a security, such as shares, options, futures, instruments creating and acknowledging indebtedness, and such other deposit accounts or other facility as a bank may by notice determine. So further to explain the 7-year period for the different type of accounts. So if it's a deposit account made for a fixed period, from the date on which the fixed period is terminated or the date the customer terminates his instructions to automatically renew the deposit, whichever is the later, is when the period starts for the 7 years. But for a deposit account not made for a fixed period, from the date of which the customer last conducted a transaction with respect to the deposit account, whether that's a withdrawal, whether that's a transfer, any type of customer-initiated transaction. And other than that, a facility other than one referred to in the paragraphs above, from the date of which the facility was issued, established, or the obligation to make a payment in respect to the facility accrued, whichever is later. Who can initiate a claim with the central bank? Dormant claims and inquiries are initiated by customers, but must be made by the submitting bank on behalf of the client. In instances where banks transferred ownership or the institution was dissolved, the administration of the transferred dormant funds are to be transferred to the acquiring bank or liquidator, preserving the chain of responsibility for future claims and administration. The process to reclaim funds transferred to the central bank. If your bank notifies you that you have a dormant account, or if you have any reason to believe that you have a dormant account at a bank, you should go to the bank in which the deposit or account or facility was held to complete the dormant account claim form. Your bank will ask you for identification and other documentation to make sure that you are the owner or joint owner or otherwise entitled to make the claim. For example, where the claimant is an heir or legal representative of a deceased owner of the account. The bank will thoroughly investigate the claim, and once satisfied the dormant account was transferred to the central bank and the claimant is entitled to make the claim, the bank will forward the completed dormant account claim to the central bank for processing. Once the central bank receives the completed dormant account form, we will verify the balances were transferred and calculate the amount of interest accrued on the funds if applicable. And following verification, we provide the funds that are still in the central bank's possession. The central bank will pay the funds to the facilitating bank for payment to the claimant. If the claim amount is less than $500 and has already been transferred to the treasurer, the central bank has to make an application to the Ministry of Finance on behalf of the claimant to repay the funds to the treasurer. To repay the funds by the treasurer. On receipt of the funds from the treasurer, the central bank will pay the funds to the facilitating bank for the payment for the claimant. On dormant account balances less than $500, we do not accrue interest. Who is eligible to make the claim? According to the Act, a customer is a person who holds an account or other facility, a person who in respect of an account or other facility is authorized in writing to act as the agent of the person who holds the account, a person who is authorized under a power of attorney to manage and control the account or facility, where a person who holds an account or other facility is deceased, it would be the heirs, the executors, the administrators of the sign and assigned to that person, such other persons that the bank may deem appropriate. Financial institutions' responsibility. All dormant claim forms must be accompanied with a cover letter, which includes a full settlement instructions of the bank, not the client. The cover letter should also include a contact, the amount of the claim, and the client's number. The cover letter should accompany the completed claim form and submitted to the following email address, dormantaccounts@centralbankbahamas.com. Once the documents are received and reviewed, the central bank will process the claim and return the funds to the respective bank to issue to the client. Please note that banks are encouraged to ensure that the clients are properly advised that all claims must be submitted on their behalf to that bank, and that the central bank does not issue claims directly to any customers. So the role of the finance department, all of this, is to be administrator of the dormant fund accounts. This involves processing submissions from banks and claims received and investment of the dormant funds, in which the dormant fund activity is reported to the Dormant Fund Investment Committee. Some key takeaways. The dormant accounts legislation speaks to accounts that have had 7 years of no customer initiation. These accounts are then transferred to the central bank for safekeeping for a period of 10 years. Accounts that are less than 500 are immediately remitted to the Treasury Department. After 10 years at the central bank, so in 17 years in total, the funds are remitted to the Treasury. The process to retrieve dormant funds begins with a request from the institution in which the funds were originally held. After the institution verifies that the submitted funds, that they did indeed submit the funds to the central bank then verifies the claims and transfers the funds back to the original institution to be distributed to the customer. Here are some frequently asked questions that we take note of. How do banks satisfy the central bank that they have made sufficient efforts to contact dormant account owners? Per the guidelines for the administration and ultimate disposition of dormant accounts set out the minimum requirements that banks are expected to comply with to identify, investigate, and administer inactive deposit accounts. How would an account owner know when his or her dormant account was transferred to the central bank? The bank should seek to contact the owners of inactive accounts and facilities. After the account or facility has remained inactive for 1 year, after account or facility has remained inactive for 3 years, and after account or facility has remained inactive for 7 years. What should you do if you are the heir or legal representative of a deceased person who you think owns a dormant account? So banks in the Bahamas are generally prohibited from disclosing to third parties any information about the identity, assets, liabilities, transactions, or accounts of account holders. Therefore, banks will only provide information about a dormant account to a person who can prove their entitlement to obtain such information. So fishing expeditions to fund dormant accounts are never entertained. And if you are the heir or legal representative of a deceased or an incapacitated person who you think owned a dormant account, The bank at which you think a dormant account was held will let you know what documentation you must provide to verify that you are entitled to obtain information about that account. If you do not know the name of the bank, it may be necessary to engage legal counsel to assist you in finding any dormant accounts that may exist. And I guess now we can open up for any additional questions.
Thank you both, Mr. Burrows and Mr. Brown, for the presentation. And we would also like to thank the listening public for their patience in terms of our start time this morning. So we'll open the floor, as Mr. Brown indicated, for anyone that would have questions at this time. You can either type your questions in the chat, or you can unmute to ask your questions. Okay, so I see question popped up in the chat, and a question came in and it reads, we understand that dormant funds are transferred to the Treasury after 17 years. Once the funds are transferred, is the rightful claimant still able to claim or recover those funds from the Treasury? I'll stop there. There's a question after that, but I'll stop there for a response.
Okay, as we alluded to earlier, once what the act brought in, once those funds are sent to the government, the liability, there's no more liability for those funds after that 17-year period. So that, in short, no, those funds have already been dispositioned to the government. It's cheated to the government.
Okay, thank you. And we have another question here regarding interest. What happens to the interest on those funds once they are transferred to the Treasury?
So, our next steps, what is being enacted is the calculation of interest. The only achievement prior to the 2025 change, the only achievement was the principal. The interest remained in the fund, continuously reinvesting. The next steps for the dormant fund administration and under the oversight of the investment committee is to roll out the actual allocation to individual accounts interest earned over that time frame. So that's the next step of the rollout. The time frame for that is estimated to be early 2027, in the first quarter, thereabouts, where the interest will be specifically identified to individual accounts, and a framework will be rolled out in terms of the repayment, the claimants, the interest will be then attached. So currently no interest is interest remains, no interest is distributed.
Okay, thank you. How long does the process take for the funds to be sent back to the bank?
The process can take anywhere from 2 to 5 business days. That depends. It depends on a number of things, and the comfort with what we would have received, whether or not there's anything incorrect in the submission of the claim, and that's pretty much it.
Okay. A question here says, will the PowerPoint presentation be available for viewing at a later time?
Yeah, certainly.
Okay. So we have another question here. It was said that if the claimed amount is less than $500 and has already been transferred to the treasurer, the central bank will make application to the Ministry of Finance on behalf of the claimant for repayment of the funds by the treasurer? What happens if the claim amounts are more than $500?
Okay, so if the claim amount is more than $500, the same process. There's no need to write in those instances because once it's gone to the treasurer, it would have gone through its full 17-year period. The distinction here is that if it's 500 or less, immediately upon receipt after that 7-year period, those funds are remitted to the government via the treasury. So in that 10-year period where they have to claim from 7 to 17, they may claim and the funds are no longer with the central bank. We would then write to receive those funds and then transmit it back to the institution. Funds above would, if they have already been remitted, then they're already in the hands of the government and there's no reclaiming of those funds.
Okay, thank you. It has been my experience, the process is not customer focused. Should there be a bank clearing system where attorneys can send the names of deceased customers to determine which bank may have accounts in that name?
Well, I mean, you can have a number of, you can think of a number of ways in which the process can be done. I won't say that that's incorrect, but as it is now, the institution that where the individual had the relationship with is being flagged as opposed to creating some new bureaucracy. They're being flagged with transitioning their customer, their client, from the beginning to end. And the end point is the offboarding of their client at the point of the distribution of these funds to the government. So they have been tasked with meaning and maintaining that relationship up to 17 years of inactivity and an additional 10 years for administrative purposes to continue to track. That is then, there's a layer as well where the central bank as a supervisor institution, as one of the supervised institutions, the institution central bank has oversight and on examinations can verify that the dormant funds is being administrated in accordance with the guidelines. So yes, that's another way, but this is a natural progression.
Okay, so the next set of questions appears to be on the interest paid. So it's 3 different questions. I'll read the 3 and then I still can circle back if necessary. What is the current rate of interest paid to claimants when dormant funds are returned? Also, how is this rate determined by the central bank? Is it a fixed rate set by the central bank or is it performance-based, depending on how the dormant funds are managed or invested?
Okay, you may have to repeat the first part. The last part, like I alluded to, that is going to be rolled out. That is the next step in the evolution of the interest rate that's in discussion, being researched, and the intent is to roll it out in the first quarter of 2027. Repeat the first part of that question.
So what is the current rate of interest paid to claimants when dormant funds are returned?
Okay, so that doesn't exist. I answered earlier. The interest hasn't been paid as yet. That's being rolled out in early 2027.
And also they ask if the rate is determined by the central bank.
Yeah.
Well, when it comes, will it be determined by the central bank?
Well, some structure will be built to determine how that rate is going to evolve. They both will be determined and rolled out at the same time.
Okay. In cases where the funds from a joint and account are sent to the central bank, can one signatory claim or must it be both based on the signing authority?
Based on how the account is set up, it's a joint and Unfortunately, that would have to go to probate, where you have to get legal representative to show that you can act on the account, seeing that it's an and account, because with that setup, that initially required two people to initiate a transaction to take place. If it's an or account, then there wouldn't be no need for it because it's either or person could do it. But in situations with an and account, unfortunately, you have to get a legal probate to get the signing rights over of that account to be only the one person.
Yeah, but that'll be addressed at the bank level. While we are aware of what takes place, the institution where the individual, the account resides, the administrative process would ensure that step is taken.
Okay, so this, in the presentation, we shared types of account that can go dormant. The person is asking if you can just reiterate what those types of accounts are, please.
Yeah, so you want us to show the slide?
10. Yeah.
And we have the slide on the screen.
Okay, so here I could just call off a few for those who may be using a smaller screen and can't see it. So you have a deposit account. Those include demand, savings, and fixed. Checking account, you could have bank draft, cashier's check, certified check, money orders, traveler's check, credit balance on a credit card, credit balance on a loan, collateral held on a loan, including cash and non-cash collateral, funds paid for shares or other interests in a licensee, a custody account or a safety deposit box, a deposit account of precious metals and precious gemstones, all securities that is listed in the Act, which is the schedule in the Securities Industry Act. And we have it here, that was from 2011. And then such other deposit account or other facility as the bank may by notice determine. So those are the types of accounts. And we have here the legislation where you can also review. This is posted on the central bank's website. It's the Banks and Trust Companies Regulation Act 2020, and it's section 78, subsection 1. So the next question here in the framework.
Sorry, Latasha, just before you go, I just wanted to add that the central bank plans to improve the search process to the question that was asked a little earlier about being able to find out. The central bank plans to improve the search process, which would be a centralized process, but would require new regulations and investment in a database to facilitate that. So the person who asked earlier with regards to centralizing the process, that is something that may be on the horizon under new regulations. Sorry, that's it.
Okay, thank you. Thank you for that addition. So in the framework that's to be rolled out regarding distribution of interest, what happens to interest on those accounts already sent to the government?
So what happens to the interest?
Yes.
Oh, so the interest remains, and again, the interest is reinvested. And we answered this earlier. So those funds will be that interest will be addressed in the next evolution, which is going to happen in early 2027.
Okay, thank you. In the framework, sorry, I just read that one. If you are a legitimate heir to dormant account and the private bank in which the monies was held is closed, how do you go about recovering your funds when the private bank is no longer operational to liaise with the central bank?
Well, we alluded to that earlier. So if there's any mergers, acquisitions, or liquidations, there's a handover. The new institution takes on that liability. The purchase institution takes on that liability. In addition to the liquidators would bear that responsibility as well. Yeah. So there's an exchange. It isn't left, there's no gaps, and there should be no gaps. So the new institution is the owner of that liability and has um, the responsibility there.
Okay, I might have missed it, but can an escrow account be classified as dormant? If a bank closes a customer's escrow account that was not delinquent and the explanation given keeps changing, what can a customer do to rectify the situation?
Sorry, that one sounds a little specific. I'm not certain. Repeat that for me.
I might have missed it, but can an escrow account be classified as dormant? If a bank closes a customer's escrow account that was not delinquent and the explanation given keeps changing, what can a customer do to rectify this situation?
So in the closing from the bank of the account for escrow specifically, because funds were not returned to the client. Is that in the scenario? Because for escrow is for a specific purpose. So it normally doesn't take that it's exempted for the most part, seeing that it's for a specific item and they
And-
are used for that specific item. So it doesn't necessarily fall under that category of dormant. But in this scenario, we're saying that the bank closed it and it sounds like they did not reissue the funds back to the client upon the closing of the account.
Well, it seems like it can. It's similar to a check being a draft and left unclaimed. So if it fits under that scenario, I would say it can be considered dormant, but I'd want to know a little more about of this specific instance to be able to speak to it. It seems like a little more going on there.
Okay, and for the person that put the question there, it appears that you have already attempted to engage officials at the institution. If you have already engaged management and you're saying you're still not satisfied, we do have a financial services ombudsman who is resident at the central bank, and the details and email address and telephone contact can be shared with you. So I can provide that to you if you wish to escalate your matter for further investigation. So the next question here reads, does this dormant funds regime apply solely to bank deposits, or does it also extend to deposits held with the credit unions and other institutions regulated or supervised by the central bank?
This is specific to banks and trust. The credit union falls under a different legislation, which actually is in the process of being revamped in the short order, from my understanding. So, but what we're speaking about speaks specifically to bank and trust regulation, not credit union regulation.
Okay, and this person is asking if you can show the takeaway slide again, please, the one that says key takeaways.
Sure.
So these are the takeaways based on the presentation this morning. So while they're reading that, once it's on the screen, I can move on. Is there any way the funds at the central bank can be sent directly to the customer?
No, funds are returned to the institution.
And that's based on legislation. So the central bank has to be guided by the legislation, and the legislation indicates that it goes to the initiating institution who send those funds to the central bank. How are the contents of a dormant safe deposit box addressed by banks and central bank under the relevant procedures?
The safe deposit box falls under the same guidelines of the 7-year period. It all depends on when was the last customer initiated transaction. So with safety deposit box, I would imagine at least the customer has to go in, review the contents, have some communication with the bank at least about the safety deposit box, just to ensure that that 7-year period does not fall by the wayside.
Okay, thank you. Escrow question here. Yes, can you please share the contacts with me? Okay, this is in reference to my comment when I offered to provide the contact for the Financial Services Ombudsman. So, Ms. Roll, I will reach out to you to provide the contact details for you. So thank you for your comment and for the request. We have a question here in reference to the presentation. Mr. Burrows indicated that the presentation will be shared. And so we have email addresses for persons who registered for this session this morning. And then even outside of that, the presentation itself will be posted to, we'll contact you in terms of sharing the presentation with you. So we'll get back to all who are on the call in terms of the presentation being shared. But thank you for that request. And we'll also request, because I missed a question in here where someone was asking about if certificates of attendance will be issued for this session. You can reach out to the External Relations Unit with that question, Mr. Tyrone. Our email address is exr@centralbankbahamas.com. With your question, and we'll respond to you. I see something here from Ms. Ferguson. I need clarity. If a fixed deposit account matures in 5 years with no deposit or withdrawal from the customer, and the account rolls over for another 5 years, on year 7, the funds will be sent to the central bank?
No, the funds would be sent to the central bank from the year where there was no communication. Once that account matures and there's no indication for a rollover based on the instructions, etc., no communication there, that's where the 7-year begins, not on the point of a maturity and then a roll. Fixed accounts are different from a savings account or a checking account. Inactivity is not measured similarly.
Okay, thank you. And once this is back on the safety deposit box, and once the safety deposit box is confirmed to be dormant, say please provide clarity on how it's the contents, how is it the contents are treated by the central bank? Ms. Ferreira, you want to add a little more to that question for us, please? While we wait for her to do that, I'm seeing a few more questions in the Q&A. What about property conveyance documents not collected by the customer for an extended period regarding mortgages that were fully repaid. Okay, to this person with this question, this session this morning was on understanding dormant accounts. This question is pertaining to a different scenario. If you have already made contact with your financial institution and escalated your concern to management, and you're still not satisfied with the response that you have received in reference to your deed and mortgage documents, I can also provide you with the contact to our financial services ombudsman, who would be able to launch an investigation in your matter. So can you please send an email to exr@centralbankbahamas.com, and we would be happy to assist you in terms of connecting you with the financial services ombudsman. Our next question here says, can we get a hard copy of this presentation? So we addressed that. Initially, Mr. Burrows indicated that we can share it with you, but we'll have further internal discussions and then a decision will be made in that regard. This is in reference to the presentation being shared with all participants. And as I indicated, we have your email addresses, so the final position on that will be shared with you. So a question here is, please also go back to slides 10, 11, and 12. So if we could go back to slide 10, if we could start with slide 10, please. Okay, so yeah, this is what we read off already in terms of types of accounts that can become dormant. And I can quote again the section in the Banks and Trust Companies Regulation Act 2020, it's section 78, subsection 1, and you would see the full list there. If you can go to 11, please. Okay, and this was the explanation relative to the 7-year period. I can also provide you, it's in the same act, Banks and Trust Companies Regulation Act 2020, section 78, subsection 3. And you would see the details there. And if we can go to slide 12, please. And who can initiate a claim with the central bank? Mr. Burrows indicated previously that it would be the customer actually initiated, but you initiated with the bank that you have the relationship with. The bank that you have the relationship with would then approach the central bank once you have satisfied them with all the documentation and the form that needs to be filled out. Okay. And so I will go back to see if, so Ms. Ferreira has added a little more detail. The contents I expect are transferred by a bank to central bank, where the contents include non-monetized instruments, sorry. How are these treated or addressed? And she's referring to safety deposit box.
Well, once again, it depends on what is in the safety deposit box, and the act speaks to whether or not it could be liquidated and transferred to the central bank. In instances, some instances, we would request that the institution continue to hold custody of those as agent on behalf of the central bank. If there's no means for the institution to do it, and it has to come in, we would obtain physical custody of those assets at the end of the day and safely secure them.
Okay, thank you. And I think we have addressed all of the questions or comments that were shared via both chat mechanisms. And so with that, if we have no further questions, I would like to thank you, Mr. Burrows and Mr. Brown, for so ably sharing with us this morning, for providing clarity, for providing the process for persons that may find themselves in a situation where they believe that they have funds that have already been transferred to the central bank. Thank you for providing an understanding of what are dormant accounts and the types of accounts that could be impacted. Your discussion, your sharing this morning was very informative and very valuable. We would also like to thank to you, the listening audience who's on the call. Thank you for your patience again, as I indicated in the beginning, when we had a delay in our start time. So we thank you for that and hanging in there with us. I've enjoyed my time here, and I'm Latasha Campbell, the Assistant Manager of External Relations Unit. And it was a pleasure to host and moderate you this morning. We will end, if you can see the screen now, we have contact details for our finance department. It's Dormant Accounts at centralbankbahamas.com. If you wish to send the team an email, our website is also www.centralbankbahamas.com. And if you have any other questions, any other concerns, you can reach out to the External Relations Unit at exr@centralbankbahamas.com, and we'll be sure to answer those questions or direct you to any subject matter expert, depending on the type of question that we receive. And so we would like to end too by encouraging you, the public, to ensure that you consider estate planning in terms of when you do have any type of financial facility that you are covered, that family can become aware if at any point in time you're unable to handle things on your own. I do know that some persons don't like to really talk about or consider estate planning, thinking of, death. But we do know that in the times that we live in, estate planning should be considered, and we should ensure that our affairs are in order. And so I would also encourage you too to follow our social media platforms. Our website would be the formal means of us sharing information with you, and I shared that address previously. You can also find us on Facebook, you can find us on Instagram, you can find us on LinkedIn. And so stay tuned, follow our pages, like and share our posts, and we, in the coming months, would be hosting another informative learning series on a topic to be determined, but it's a part of our public education initiative to keep you, the public, informed, up to date, and to provide clear guidance and practical insights on matters that are in the financial services sector. So with that being said, we say thank you for joining us today and enjoy the rest of your day.